London has seen its largest initial public offering of the year so far. Beauty tech group, which owns 3 companies selling home beauty devices, saw its shares rise by as much as 6.6% in its trading debut. It ended the day just below that as the market closed. And in another boost for the city, food and drinks company Princes says it's considering listing in the UK capital. Well, this is welcome news for London, which has seen a dwindling number of listings this year. It's fallen out of the top 20 IPO venues, lagging behind Mexico, Malaysia and Oman. While the United States, Hong Kong and China dominate, the UK comes in at 23rd, raising just around $250 million this year so far. That compares to around $23 billion in 2021. And it makes 2025 the worst year for listings in 3 decades. Well, let's talk now to Joshua Mahony, who's Chief Market Analyst at Scope Markets. Good to see you again, Joshua. So apart from these 2 companies, which we've just mentioned, it seems that IPOs are choosing almost everywhere but the UK. Why is that?
I mean, look, this is part of a trend that has seen the US essentially sucking up most of the capital for companies, certainly within the English-speaking world. And I think the UK, yes, it has been positioned well historically, but it finds itself in a bit of an interesting position where, of course, the valuations attached to companies over in the US have always been historically high. The capital within the US market is significantly higher than the UK. And of course, for English-speaking companies, it does make sense to perhaps list over in the US for those benefits. Doesn't necessarily stand to reason for a Saudi company to list in the same way as maybe a UK or English-speaking firm. And so you can see why some of these different regional companies might list locally, whereas English-speaking companies might choose to list over in the US, given the fact that it is just positioned to give them higher valuations. And we're seeing that recently with the talk of, say, AstraZeneca with the dual listing and many companies potentially either choosing to move their listing or possibly getting bought up by private equity and ultimately then getting relisted over in the US.
So you say the US poised to offer higher valuations. If you compare the US to the UK, is there anything else that sets them apart? The way that governance is managed, costs, anything else?
Well, I mean, look, ultimately, when you're looking at the weakness of the IPO market at the moment, it does raise questions about the positioning of the UK and what we could do to be able to draw additional IPOs into the country. I think there's going to be a raft of things that are within the mindset of a company potentially listing. When it comes to rules and regulations, you know, is this a good time for the government suddenly to start easing those regulations at a time where, of course, they're trying to clamp down on many of the top earners in the country? They're potentially raising taxes. So do they then start to loosen those regulations for companies or owners of companies trying to sell shares? You know, it's just not necessarily a great position for them to be in at the moment. So that's probably not necessarily going to change. In terms of the attractiveness of the US market as well, everything that's happening at the moment with Donald Trump and his government, really it's a US-centric approach. So it's a talk of bring your operations to the US. So in a way, it sort of feels like it makes sense to be located in the US as well for that kind of reason.
So we've had news of these 2 IPOs, this beauty group, this food and drinks group. Are there any particular sectors which are attracted to listing in the UK or to the US? Well, look, I mean, ultimately, I think, as I've sort of mentioned, I think for the most part, it stands to reason that companies that are big enough and English-speaking in focus and relatively globally focused will probably look to the US ideally. I would say probably domestically focused firms in the UK would probably, it stands to reason that they would list in the UK. It doesn't really make much sense for a company where all of their revenues are in the UK for them to suddenly list over in the US. Probably they would keep it domestic, but soon enough what you see is other companies abroad, let's say a supermarket chain in the US, might see the lower valuation attached to a company in their industry in the UK and decide to buy that for their portfolio. Soon enough it gets swallowed up and that's part of a company listed in the US. Joshua, great to talk to you as always. Thanks for coming on the programme. That's Joshua Mahony from Scope Markets.